Thanks for your time and turning up today. There's a couple of familiar faces here. Thanks for coming the time and seeing how, for the people who have heard the story before, what we've done in the past year. And what I'm going to try and do through the course of the next sort of 20, 25 minutes or so is give you an introduction to the company, and for those familiar, they might have already heard that. But explain our business model. And I think that the key part of what I'm going to talk about today will be what we've achieved in the past year, what we've done, and how that's significantly going to impact the coming financial year, which starts 1 July. Because it's not only interest to our existing shareholders because of the growth they'll see, but if you've never heard about the company before and are potentially a new investor, you want to find out what we're delivering to you in terms of revenue and earnings going forward. And then we'll talk a little about the future. Now, I've been coming to Master Investors, I think this is my third year, and it's a great event for us. We've generated new shareholders out of it. We've managed to educate a lot of people about what we do, and it's one of the few times of the year we actually get access to people that normally, because we're based in Singapore, who might normally struggle to get in contact with us and see us and see how our business is going. So I'll jump right in, and the great thing about sort of coming here again and again is I think 3 years ago when I first spoke at this event, we had about 20 planes, we had revenue of about $40 million, and we'd had a long history of success already. And I'm really happy and proud to be here again this year. We start, as we sit here today, we've got 37 planes. We're about to, we've got over $60 million revenue, about to report, much higher than that in the financial year just that's going to end 30 June. And with all the planes that we've delivered this year, there are going to be significant revenue increases for the 2017 financial year. So it's a good time to be a shareholder, and it's a good time to, if you've never heard about the company before, to consider what we do and how we're trying to add value for shareholders moving forward. So what we do is that we own aircraft and we rent them to airlines, and it's as simple as that. We only deal in commercial passenger aircraft. Typically in our industry, we lease them to airlines for very long terms. A typical lease is 10 to 12 years. And the best analogy for those of you who have never heard of aircraft leasing companies is that buying a plane and renting it to an airline is a lot like buying a flat to let. You go and find your asset. In our case, the aircraft, we got access to brand new aircraft. And then we find a tenant, who in this case is an airline. We do lots of credit checks on our airline to make sure that they're strong, that they're going to be around for a long time. And then this is where it differs. An airline will typically and are happy to sign a lease for 10 to 12 years to use that plane. And all we get from that airline is a rent check per month to use that piece of metal, to use our asset. They do all the maintenance, they do all the insurance, they supply the pilots, they supply the crew. They pay us to use our asset. And why it's different to the property analogy is that typically our yield on the asset can be 3 or 4 times what you'll earn on a flat to let. So our yield on our asset is over 13%. It's what we just reported to the half year. And so think about that. If we sign a 10-year lease on a plane and it's getting us 13% a year, in 10 years, we get back 130% of what we paid for that plane. So we pay the plane off inside that first lease that we typically sign with an airline. And the planes live for 25 or 30 years, so it generates huge free money after that. So the planes build up equity in themselves by paying themselves off. And it's a lot like, when you buy that flat to let, you want your tenant to, pay off your mortgage. So you own that asset outright. And that's what our investment model is. And we've been around for 10 years, and we've been profitable for 10 years, the whole time. And we've been growing significantly. And as I said, the interesting part is that we created an opportunity for ourselves to grow a year ago, and we've never grown faster in our history than in the last year, which is why I think there'll be really exciting times ahead for this company and significant growth in revenues. They're already locked in and contracted from the new planes we've delivered this year in the coming financial year 2017. So I'm here to sort of explain, I'll explain the business model, and explain what the changes are in the company sort of moving forward. So the company was started 10 years ago by the chairman and founder, Jeff Chatfield. And at the time, he was running a small West Australian airline, and it needed a couple of planes. And so we set up this company to provide those couple of planes. And our story ever since then is one of evolution. You know, within a couple of years, we were dealing with a national carrier rather than a regional West Australian airline. We were dealing with Virgin Australia. And we started supplying planes to Virgin Australia. They asked us to get involved with a brand new aircraft to supply to them, which is that plane there, a turboprop, ATR 72-seat turboprop, which is manufactured effectively by Airbus. And we introduced that plane to Australia with Virgin Australia. And ATR liked it so much that they gave us lots of options and asked us to market that plane on a worldwide basis. And so that's what we did. And so we started accumulating global customers, and we started growing the fleet year by year, and we do jets as well. And the reason why that plane has been particularly successful for us is because it's one of the most fuel-efficient planes on the planet. It is used for short journeys, 300 to 500 nautical miles, which is about 30% of all airplane journeys in the world. So it's used by companies like Flybe to fly to Dublin. And what it does over those short distances is use about half the fuel per seat per hour of equivalent jets. And so we started marketing globally, and in the last couple of years we've started accumulating a bunch of new customers. And as we grow our customers, we're not only getting scale and more assets on the balance sheet, but we're diversifying our sources of revenue. Because it's important, and it's about risk mitigation. We want lots of assets that are spread out, coming from a range of different customers. Because if, in these sorts of businesses, if a customer has a problem, you want a range of different sources of revenue. So we evolved our business, and in the last couple of years, we started doing brand new jets as well. And what we've seen in the past year, in the fastest period of our growth in the history of the company, so we've delivered virtually a plane a month, brand new plane every month to our balance sheet, and we're seeing our monthly revenues grow accordingly. So Jeff founded the business. We've got a team of airline executives that have dozens and dozens of years between them experience in doing what we do. Rod worked for Airbus for 25 years. He's our senior sales guy. He's worked in China. He's worked all over the world. He's delivered a lot of Airbus products to airlines around the world. And if you think about our customer list, there are only about 200, 250 airlines on the planet now. And that plane that I showed you that's on the front cover of the presentation, that plane is used by 200 customers, 200 of the 250 airlines around the world. So it's a great product. It leads its class. It has no real direct competitor, or its direct competitor, it outsells 7-1. There's a Bombardier plane called a Q400, but it weighs a lot more than that particular product. And so that plane dominates the regional aircraft space. And we're one of the few lessors in the world that deal with that aircraft. And so we've seen great demand for that aircraft from the airlines of the world. And that gives us inroads into all of those airlines, and it helps build our relationships. And then it enables us to sell other products to them like jets. So we see a continual evolution of our business. This turboprop that is very successful, it's very popular with all the world's airlines, that's getting our foot in the door to all the other airlines in the world. And as we grow our business into the future, we think we're going to do not only more turboprop business, but obviously more jet business. And one of the key things that I want to impress upon everyone that's here today is that we're not trying to do anything to change our business. We just rent planes to airlines. We've done it since day one, and that's all we're going to do. But in 10 years, we've continued to grow every year, and we've continued to be profitable every year. So we just want to do more of the same. Importantly for our company, and this is typically quite rare for most listed companies in London Stock Exchange, is that employees own 22% of this company. I own shares in this company. I bought them on market at up market price. We've all bought shares in the past year. We make our motivation is to see the share price go up. And if you look at our annual report, you can look at our salary numbers, and you'll know that nobody in our company makes millions of dollars in salary. Nobody does. We only have 17 employees. And so as we grow and get bigger, what we're trying to introduce to the company is real economies of scale and make it more profitable. And that's an important thing, that our interests are aligned with the shareholders. Share price goes down, we feel that pain. That's why we work as hard as we can to make the share price go up and run a good business. So just the short overview of who we are and what the company is right now. We're based in Singapore, and we've got a 10% tax rate in Singapore, so it's a good place for us to do business. We focus our markets in Asia Pacific and Europe, so we're close to those markets. We've been listed on the London Stock Exchange. Our code is AVAP, and we've been there for 6 years. The share price has done well over 6 years. We focus on the most popular types of aircraft in the marketplace. And the reason why we focus on the most popular types of aircraft is that they're the aircraft that everybody wants. So if we have a problem with an airline, we go in and we fly our plane out, and then we rent it or sell it to another airline. So we protect our shareholders' interests. It's about risk mitigation. We are simply asset investors, and we generate yield on our assets. If our assets stop generating yield, we go get them and we put them somewhere else. Currently, we have 37 aircraft. And as I said, when I started coming to Master Investor, we've almost doubled the number of aircraft in that time, in the last 2.5, 3 years. So right now, the yield on our assets, 13.4%, and our biggest expense is the cost of debt that we borrow from banks to buy the planes, and that's under 5%. So over 13%, take 5%, that's 8% net margin. And out of that 8%, all we do is pay the admin costs, cost of our office and employees and all of those things, and we take out depreciation charge, and we depreciate the planes over 25 years. It's a very simple, easy to understand business. Because of all the new planes that we've been adding over the year, what we've seen is that the average age of the fleet has dropped 4.5 years. And all 37 planes, if you, on average, have almost 7 years to run on their fixed rate leases. So these assets will generate revenue contractually for 7 years. That gives you, the shareholder, enormous visibility about what our revenues are going to be into the future. I won't spend a lot of time, but this is just to show you, those people who don't know the company, continual growth in assets, continual growth in income. We're a company that knows how to manage growth and knows how to maintain profitability through stages of enormous growth, which is very rare. So a bit about our industry. Every second aircraft in the world is owned by leasing companies like us. We're intrinsic in the delivery of new aircraft. Our customers are having a great year with high efficiencies and load factors. That's bums on seats. They've got really record low fuel prices. They're generating record profitability. It's really important for us because we want really healthy customers, really healthy tenants that can pay our rent checks every month. And there's growing need for aircraft as the demand for travel grows every year. And everyone in this room probably travels more on an airplane than they did in previous years. And you've got growing middle classes in China and India that are catching their first. 100 million people in Asia caught their very first flight last year, which means demand for new aircraft. And that's what we deliver to airlines. So a lot of airlines have a history of struggling businesses, but it's a very resilient industry, and it's resilient simply because humans are aspirational travellers. We want to take our families on holidays somewhere. So even though there are bad airlines, most of my work is done not looking at the balance sheets of airlines and making sure that they're strong and profitable, because we all want to travel more. And it's important to note who we're not. So this is how we mitigate risks, how we make sure we find the right people to lease to. We only deal in the most popular types of aircraft. We deal in the strongest markets in Asia, Pacific and Europe. We don't deal in the really big planes, because there's very few versions of them, and they're harder to trade between airlines and harder to move between airlines. And we don't over-order years in advance. You know, we're small enough and flexible enough and nimble enough to continue to grow the way that we're growing. So our value drivers. I won't spend time on this, but it's in the handout. And for those of you who haven't got a copy of the presentation, I do have hard copies here and hard copies down at the stand 90 at the bottom of the stairs. But we look at the age and the type of the aircraft, we look at lease rates, and we try to assign lease rates for very, very long years. So this is just explaining the business model very, very quickly. When we buy a plane on day one, we use bank debt, and then we sign a lease for up to 10 or 12 years. But what we try to do is pay that bank debt off over those 12 years, which we're able to do with those strong lease yields, and then we own the plane outright. But a plane lives for another 15 years and generates effectively free money for that whole time, profitable the whole time. Very simple business model. Just like you want to pay your mortgage off as quickly as you can, we want to pay off our debts as quickly as we can as well. So this is our financial results for the half year, and I'll finish off by talking about the big change in the company this year. A year ago, we went and, if you look at this model, the banks will give us all this money. That's fantastic. The hard bit is finding this. We don't want to ask shareholders for that, because if you take money from shareholders, your share price doesn't go up. So we went and borrowed $100 million in the US last year, and when we combine that with senior bank debt, gave us the ability to go and buy about $400 million worth of planes. Well, since May last year, we've delivered over $250 million worth of planes. We expect to deliver $300 million worth of planes this year by 30 June. All those new planes are going to generate extra revenue, and we're going to see a full year's revenue for those brand new planes come in 2017. And that's the reason why you're interested in becoming a new shareholder in this company, because we're going to see significant revenue increases in 2017. You know, we saw 15% growth there. Well, to the full year 30 June, we expect we made $30 million, over $31 million in the first 6 months of the year. We expect that number to be $40 million in the second half of the year. And then that grows even higher in 2017 and beyond. And I've got some research and I've got some analysis on the company downstairs that you can spend a lot more time on. So we've been profitable the whole time. We've added new customers. These are names that you know: Air France, Flybe, Thomas Cook. And so just looking ahead, we've got 37 planes today. We're expected to deliver a new plane in the coming days, so you'll see more announcements from us. We've got plenty of future growth lined up with orders and options for new aircraft. You've seen the growth in the company, profitable the whole time. You see, average age of the fleet's been coming down, and these lease terms been going up. And this is growth in revenue and growth in fleet assets. And this is where we are to the first 9 months of this year. This is the extra growth we've added in just 9 months this year. And as I just want to finish on, all those extra planes will generate a full year's revenue in 2017. So we've got a great young fleet, long lease terms, really good contracts. We're profitable right now. We've got more fleet additions coming on regularly. We're a simple business model. We're not trying to do anything new. As we've gotten bigger, we've just been able to do it with more airlines, multiple customers, and we're looking at significant improvements in results in coming years. I'm here all day downstairs in stand 90. Please come and see me if you've got further questions, and I can give you a hard copy of the presentation. Thank you for your time.